You have such an optimistic view. What is your view on GDP, say, 12 months out? Is the gloom crew overwrought?
They're actually not. It's the people who are getting very excited about things who are kind of overdoing it. If you look at everything we've been through, it's not clear we went through a recession. So therefore, it's not really clear we're going into kind of a recovery. And by that, I mean a normal recession, normal recovery. We're watching a few things pretty carefully. Obviously, the restart of schools is going to be important to the labor market. If you look at all the people who've left the labor force, they are heavily, heavily weighted towards single people. So what's keeping them out of the office is, healthcare concerns, childcare issues, and probably to some extent the government benefits that are now expiring. So we need to see how those people re-engage. We need to see the supply chains begin to function well again. And none of these things have happened yet. So I think people who kind of came into this year thinking we were going to see 7% GDP growth, they've now taken their number down. The Bloomberg consensus is now all the way down to 6.2. At MetLife, we're at 5.5. And I've been there since the start of the year, and I'm pretty happy to stay there.
I mean, it's a nice trend down, to say the least, in the labor economy. Now, Chairman Powell's got to fold us in. My basic take, Drew, is Chairman Powell does not have enough information to make a splash in this speech tomorrow. Isn't he, like everybody else, waiting for the jobs report September 3?
Well, I think that's right. I also think if you look back at the minutes of the last FOMC meeting, what did you have? You had the staff telling him that there were downside risks to growth and upside risks to inflation. That's not something he's going to want to have heard. And it's going to be something that he really is going to want confirmation on before moving forward with any sort of tapering talk and the like. I would also add that, the Fed had a bad experience the last time they floated a taper at Jackson Hole. So most likely this is not the place where they're going to float the taper more aggressively, simply because of the history.
Yeah. Well, Drew, when you talk about inflation, I want to go back to one of the points you made initially about supply chain disruptions and how this has been framed as a transitory event. It is going on for much longer. People expect it to continue the disruptions far into next year and beyond. If you take a look at just even how much it costs to ship goods from one place to another, I mean, it's increased in some ways tenfold. So at what point does this not become transitory? Does this become a serious structural existence, a structural pressure on inflation that we have not seen in decades?
Well, first of all, it's a structural pressure on growth, right? Because if you don't have the product, you can't sell it. And so it doesn't show up in GDP. So part of the reason GDP is underperforming is because of these supply chain issues. On the inflation side, I think that's already happening. I think that's what you're seeing in the consumer sentiment inflation readings. If you think about inflation, you can think about it two ways. You can think about it as, prices are going up of things I want to buy. The other side of it is, can I get the things that I want to buy, right? And so really, if you take it more holistically as a standard of living approach, standard of living is going down because these supply chain disruptions mean that you can't buy what you want to buy when you want to buy it.
But Drew, this goes to the whole stag-light or stagflation-like kind of discussion and how the Fed participates in this, right? I mean, if this is something out of the purview of the Federal Reserve, out of the purview of labor markets, how does the Fed respond to something that is pressuring growth because of inflation that they supposedly have a mandate over?
Well, so I think that's an interesting question for Powell, particularly as he's going towards his reappointment or potential reappointment, which is part of the things that they're pushing people to buy ever more goods and services had been a lot of the fiscal support that they've received from the federal government. Do you lean against that, right? Because, that's just creating more demand when we're unable to fill the demand we have. It's a real big question for Powell, and it's one he's going to probably, take a pass on, quite frankly. He's going to wait this one out. And see how things develop. Stagflation light, though, it's a little much to argue. We're at 6% GDP growth, all right? We're expecting 5.5%, market's expecting 6.5%. Let's split the difference. You get 6%. That's not stagflation light. That's a strong economy with a lot of inflation. If you get half that, and then you're seeing these inflation readings, then you've got a problem.
But, Drew, let me take the outlier call. So the EU today is thinking about stopping Americans coming over without having to show vaccination status and things like that. And because the Delta variant is getting so much worse in the U.S., how can Jay Powell not address that?
Well, the question is, are people beginning to live with it? And this is where, the ultimate question has always been, what is the end game for COVID? And I think,
Right.
I'm not an expert, but a lot of the experts say it's going to become endemic, right? So, it's not the flu, but it'll be like the flu. There'll be seasonal waves. There'll be all this kind of things, and you'll probably get, vaccinations for it and be able to fight it off, and it'll just kind of fade into the background. Once we all start paying attention to hospitalization numbers instead of case numbers, that's when we'll know it's over, from kind of a consumer standpoint. What we're looking for in the near term, though, is can schools reopen and how long do they stay open? Because if schools can't open and stay open, then we're going to have issues with pulling back potentially millions of workers who are associated with that, who are having other issues that require really schools to be open for them to go to work. That'll improve the labor market situation and the overall health of the economy.
I mean, there's this awesome, it doesn't apply to me, this awesome study. I don't know if it applies to Tom and Lisa, but it basically says that if you work from home 1 day a week, your productivity increases by 4.8%. How will that change? Actually, if we have this hybrid model of working from home a couple of days a week, how does it change our economies going forward?
Well, I'm not, so I haven't seen the study. I did read the story on it. I will tell you from my own perspective, I'm not really sure how much I believe that people are that much more productive at home. Maybe as productive, I can believe that. I'm not really sure they get a giant boost from it. I think the idea of having time to yourself to think about things is great, but having time to communicate with other people and think about things collectively can also be helpful from a productivity standpoint. And I think, it's not everything is kind of a win-win, right? You're winning something, you might be gaining something, and maybe the net is positive, but you're also potentially losing something on the other side of it. And I think that's why, a lot of firms are kind of leaning towards this hybrid model where, they're trying to get the best of both worlds. And I think that there's a reason for it. And my guess is that, if they thought they could double productivity by having everyone stay at home, I think every firm in the world would tell us just to stay home.
Drew, you had a legendary career at UBS. Optimism, you and Maury Harris just quarter after quarter after quarter nailing the statistics. You're now at a stodgy insurance company, MetLife Investment, and they lean forward and they say, Drew, bonds. How do you advise institutional bond portfolio managers in this crazy bond market with no coupon, with negative yields? What do you tell these people?
There's always a place to look, and there's always something you're trying to achieve. And so it's a matter of what you're trying to achieve. I don't think we're stodgy at all, actually. I'm doing more interesting things here than I did anywhere else.
Explain that. No, there's a stereotype here. Tell us why MetLife, a wonderful August company, why is it not stodgy?
If you look at the breadth of assets we can invest in, everyone thinks, insurance companies and their, investment arms that are related to them, it's just, fixed income only. And there's truth to that. But, our firm does a heck of a lot in real estate. We do a heck of a lot in agriculture. We do a heck of a lot in privates and doing, structured finance. And our public fixed income team is awesome. And it's, you're actually getting, kind of just a much broader view of kind of investments than an investment bank where you're just, you're getting rid of one asset and buying the other, and it's constant flow back and forth.